All right, so we're going to take a look at number 37, your example that is attached in Blackboard or at the in this recording as well. For this one, there's some key things that we're going to need to remember. And the biggest one is that instead of the last example we did for the lecture part, this employee has earned money, $6,600. So that's going to come into play when we start looking at one of the caps that I want you to try to remember about. This employee earns $20 an hour, works 40 hours this week, and I want to know, and the only other things that I really give you, 4.6% for the SUTA, that changes with every company. And then on this one, we don't even have any county taxes for whatever state this would be. So we're assuming 10% of gross pay for federal, and then just to change it up a little bit, I said the state withholdings are 10% of federal. So what I want you to do in for the next about 4 or 5 minutes, and try doing it without your notes if you can, but use them as a guide a little bit, and then hopefully for the second one we don't need to use our notes. But record the payroll expense, and then down in part B, do journal entry number 2. I'll give you about 4 or 5 minutes to go through that. Go ahead and pause if you're watching this as a recording. Pause it now, because in about 10 seconds I'm going to jump in and do the answers. So go ahead and go through this and then we'll check the work. So our answers are very similar to our lecture example, just because we have the same wage expense. With the same wage expense, we therefore have the same, these top 3 were the same. This one was a little different because I used a different given percentage. And we didn't have any county, so our cash was just $800 minus the 4 taxes that were taken out. So this one should be very similar, and it should have hopefully rung a bell that we just did something like this. So therefore part B will be a little bit similar, but the feud and SUTA is going to be what's different. With part B, of course these guys are the same as our lecture example and what we just had up there in part A. What comes different is here in feud. I tell us I only multiplied the 0.06 by 400 and not $800 like everything else, because we earned 800. The reason it's only 400 is I have to go back and remember that I had $6,600 already earned. If I add in the 800 this time, I have now hit $7,400 earned. That's over the FUTA cap. If you remember the FUTA cap that I want you to memorize, it's $7,000. So therefore, I don't want to be taxed on all $800 because that's going to take me over. So therefore, I have to say, okay, do a little small, easy math problem. If I went over, what do I have left that I still need to tax to get me to my cap number? And we should all be able to know that that's $400. That's where I got the 400 to tax at the FUTA rate. Note, the SUTA rate, I didn't have to do anything special yet. I'm still at 7,400. When we look back, the SUTA rate is 9,500. So I'm not to that cap yet. All 800 can be taxed. As you get to look at number 2. For number 2, I want you to use, and this isn't in your notes, I want you to use for the star value and put in here 114,000. That's what the employee has earned up into this pay date. And I hope this kind of number will ring a bell, like Ooh, that's pretty close to a payroll tax that has a cap on it. And how is that going to affect now my journal entries for this individual? Again, the federal and the state are just the same as they were. I have a SUTA rate at 2.7%. I wouldn't have even had to put this in here. I want you to be able to memorize that, what the cap is. But take the next 4 or 5 minutes now and prepare this journal entry knowing that we've already earned $114,000. That's going to come into play. All right, so I'll come back here and pause the video if you're watching this on the video, and we'll turn it back on when you are finished. So as we look at the answers for this one, the employee earned $5,000. If I go back up to my little adding thing where I said we had $114,000, and then I added in how much I made this payroll, I've now earned $119,000 with this most recent payroll. That is definitely greater than the 117 cap. So I don't want to be taxed on all 5,000. I want to say, all right, since I went over, what then is left until I get to the cap of 117,000? And that's hopefully pretty easy to determine here. I have $3,000 left to tax, not the full 5. So that $3,000, that's where I got this. $3,000 at 6.2%, or 0.062 as a decimal. Medicare, remember there is no cap, so all the money is taxed. All of our earnings. And then you could have gotten the federal and state. Hopefully you got that all right. And then our last entry, of course, is to have the payroll check written to our employee for the $41.91.50. Now, as we get to the second part, the payroll tax expense, notice this is very short. I only have payroll tax expense on my first 2 taxes. I don't have any FUTA, and I don't have any SUTA because I went way over the cap already. I've already earned $114,000. That's way over 7 and way over 9,500. So these guys are the only ones left that I have to pay tax on. And the same calculation as above for the employee. Remember, this guy, the employer, pays the same amount. Add these 2 up, and that's how I get the payroll tax expense. For any future payrolls for this employee, this one's going to be wiped out. And we're just going to have, what this should say is payable, Medicare payable. We would only have a Medicare payable account for the rest of the year for this employee as an additional tax.